Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin briefly slipped below $80,000 earlier this week, but recovered to trade around $80,862. The Senate Banking Committee scheduled the Clarity Act markup for May 14th, and LayerZero admitted fault in a massive $292 million exploit after weeks of deflecting blame. Bitcoin tested support below $80,000 between May 4th and 6th, erasing part of a 37% rally from April lows. The decline triggered $535 million in short liquidations as leveraged positions unwound. Funding rates hit negative 0.031% per hour on May 2nd through 4th, the lowest since 2020. However, options traders remain bullish with one-week implied volatility jumping significantly. On-chain metrics support the bullish case. The 1 to 4 week holder cohort's cost basis surged from $67,000 to $76,000, now exceeding the 1 to 3 month cohort at $68,000. This golden cross pattern historically signals sustainable uptrends. Bitcoin traders hold 18% aggregate profit margins, the highest since June 2025, but exchange inflows remain muted, suggesting large holders aren't aggressively distributing coins. LayerZero admitted on May 9th that it made a mistake allowing its decentralized verifier network to secure high-value assets in a vulnerable one-of-one configuration. CEO Brian Pellegrino's company reversed weeks of blame directed at Kelp for the April exploit tied to North Korean attackers. LayerZero is migrating all defaults to 5 of 5 verification and will no longer service one-of-one configurations. Kelp moved its bridge to Chainlink, and Solve Protocol migrated over $700 million in tokenized Bitcoin infrastructure away from LayerZero. The Senate Banking Committee scheduled markup of the Clarity Act for May 14th, providing the stalled crypto market structure bill its clearest legislative path this year. Banking groups led by the American Bankers Association mounted opposition, arguing compromise language still allows loopholes for interest-bearing products. Crypto firms including Coinbase, Ripple, and Solana Institute support the compromise. BlackRock filed with the SEC on May 8th to launch 2 new tokenized money market funds. BSTBL will launch on Ethereum as a tokenized version of its existing $6.1 billion select treasury-based liquidity fund. BRSRV is a new multi-chain tokenized money market product designed to serve as a compliant reserve asset for stablecoin issuers. JPMorgan, Mastercard, and Ripple completed a landmark pilot on May 6th, demonstrating cross-border redemption of tokenized U.S. Treasury assets. Ripple redeemed Ondo short-term U.S. government treasuries on the XRP Ledger and received USD payout in Singapore. The asset leg on XRP Ledger processed in under 5 seconds. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.